So a little brief about me. I have an overall 7 years experience in trading. I have started trading in equity and then I had also done trading in futures and now I'm actually doing option selling. So today I want to bring all of that experience in trying to tell you how to lose money in a different ways and quite easily as well. Alright. I hope you'll find this video interesting. So stay tuned until the end. One of the ways you can actually lose money is to blindly follow others. So you may get SMSs from organizations or some of your friends tell you to buy, sell something, or you may just kind of follow a website where they kind of give you tips on stocks, right? One of the things which you will not get to know in a system like that is what is the basis on which those stocks actually came in. What was the prices at which the stocks were actually trading at when you bought them or when you're planning to buy them? And you also don't know the difference between their capital and your capital, their risk appetite and your risk appetite. You also don't know the psychology of your friends or probably the organizations that they recommend and your psychology and how you operate on. I'm not saying that they're all wrong, but how do you know exactly? The second way that you can actually lose money is to see that a particular stock is climbing. You see a lot of green candles out there in the system and you go ahead and basically place your order for buying those shares. What you may not know is whether the bullish trend has been momentary or that it was more event based, or for the fact that the stocks might already be trading at a higher levels and you're trying to buy them at those levels. So go ahead, this is another way to lose money, to just kind of see a bullish candle and put the money to buy these shares. So another way that you can actually lose money quickly is to blindly follow someone else's strategy, right? There are plenty of videos out there on strategies and they basically say when to take an entry, when to take an exit, and this is the strategy. But they may have missed key elements of that particular strategy, but their screen share shows a lot of green P&L. They have got a couple of lakhs, they have got a couple of thousands within minutes and few seconds, and you think that that strategy is an all-weather, all-climate strategy and you blindly follow them. Go ahead and do that. That's another fantastic way to lose money, primarily because you don't know the circumstances that the strategy may work or may not work. You exactly do not know the adjustments that is needed to be taken for the strategy to work, and you may also do not know if the market actually reverses or behaves in a different way, or an event comes and hits influencing the market as to what you need to do. The other way that you can actually cut down your profits is you saw that your amount is green and you're making some profits in a rising stock, but then the stock reverses for whatever reason. There is a reversal candle comes in, there is a price action change that is happening on the screen, and you suddenly panic and you basically withdraw from that particular stock, right? You will not know whether it is just a retracement, whether it's a little bit of a profit booking, or whether the stocks indeed is reversing or not. All that you do is you see a reversal and you panic and you sell. That's one way that you can reduce your own profit potential. But now you grew from that learning and you are brave, and now you want to wait until the stocks bounces back again without the knowledge whether that stock has done its peak, whether fundamentally there has been a problem or a correction, whether their quarterly earnings have reduced, or whether an external event has hit them like a competition, right? Remember Reliance Communication? If yes, then go ahead and do your trade. And this I hear a lot, that a lot of people enter into shares and basically say that, the best way to make money is to buy certain stocks and forget about them, right? Because someone told you that they're fundamentally strong and then you kind of forget about it. You come back and basically see what has happened to your shares, right? No matter how strong a stock is, fundamentally, it is bound to correct, it is bound to change, it is bound to face certain competitions, making the stock's value change over a period of time and not remain bullish all the time. Another way that you continue to experience losses is you have invested in a stock, the stock reversed for whatever reason, and then the moment it reversed, you continuously go and try to recover it, right? And in order to recover it, you pump some more quantities and you buy some more shares and it continues to go down. So it's basically called averaging. Sometimes it works, sometimes it doesn't work. However, you already lost your rationale mentally, and all that you want to do is to recover it somehow, right? Then go ahead, apply averaging on all the stocks, and you're bound to make some more losses from there. Now there's another situation. Here's another situation. You enter into trading, you saw some early profits, and soon after that you become very compulsive and you try to trade throughout the day. You keep on buying, selling various different stocks, and you keep making smaller amounts of profits while withdrawing, right? What you may not know is the very taxes and brokerage may eat up a lot of your profitability, and even those profits that you actually see will show negative in your next day's statement because your commissions was way higher than that. So you have invested in this particular stock, and then you suddenly see some news and you anticipate that something may go wrong. It could be inflation related, or US stock going down, or Nasdaq going down, without really understanding the potential of what it might have an impact on your stock. You do a panic selling. So panic selling is pretty usual, and they hardly realize that this particular news was short-lived and the markets have bounced back because there is no long-term impact of this particular news. There's another way that you can actually lose money, and that is that you put that amount in shares that you need it next month or 2 months down the line for another commitment, and you somehow want to make a quick buck. You invested into those shares, which is probably yet to give you the potential, and immediately you got this particular need hitting in front of you, and at that point in time the share price was lower. You can't wait because you have this commitment and you need to withdraw that particular amount. So you eventually land up withdrawing your amount from that particular shares in losses. So that's another way that you can actually lose. I have put another video earlier which talked about how to become a successful trader, and I have touched upon money management briefly. So I have pasted the link of the video in the comment section. Please go ahead and watch it. Another way to lose money is to continuously follow one particular strategy in all the market conditions. You heard this strategy from a friend, or you heard this strategy from a particular website, and you continue to follow them. You got some gains early, but then the market conditions somehow changed due to various things that place on the markets, and suddenly that you realized that this particular strategy doesn't work anymore, right? And you still do not understand markets well enough to devise your own strategy or tweak the strategy to be successful and to make it more relevant to the current market conditions. Please do watch our weekly videos that we post, which kind of gives you what the markets look like and what is the market's outlook for the coming week. And we have considered a number of factors in kind of releasing that particular video. We look at FII, DII data, we look at open interest, we look at how the Rithik stocks have done, the Rithik stocks which influences Nifty, and how the various markets have also performed, right? So even if you watch that particular video every week, you get an idea and gives you enough knowledge power to make corrections to your strategies. Another way that typically that I have seen people losing money is to put all of their money into a single stock or all of their money into a single strategy, right? And what happens is that if the stock doesn't perform for whatever reason or market reverses, you have a lot of losses in front of you. One more way that you lose money over a period of time is not really knowing what is your actual returns for that month or for that quarter and continue to trade. You do have certain profits, you do have certain losses, but you have not actually computed what your returns are, and you do not know when to stop for that period of time. I'm not going to summarize and tell you what you need to do or what you should be doing, because by now you would have gotten an idea of all the practices you should ideally be avoiding. Hope you liked this video. Do like, comment, and share with your like-minded folks. Happy trading.